Hello and welcome to another episode of the LendAPI Partner Podcast. Today, my guest is Brian Reshefsky, who is founder and CEO of Edge. Welcome, Brian, to the podcast.
Thank you for having me, Rutger.
Now, Brian, how did your business get started?
It's actually a really interesting story, but probably one that most fintech followers are used to. We are actually a spin-out of a very successful online lender. And that business was started in 2017 and started to use the foundation of the technology that we've commercialized today in lending all the way back in 2018.
And so you were already doing this as part of a lender, so you already knew that it worked? And then was it a mutual decision with the lender to spin it out, or how did that happen?
Yeah, so it's actually interesting in that regard as well, because they were not good at lending using cash flow data. It was relatively new. The aggregation system that we have today with Plaid and Yodlee and MX didn't exist, at least not to the extent it exists today. Everything was through screen scraping. And they were the first to actively use it for underwriting and risk assessment. And like anything else, when you do it enough and you stick to it, you get very good at it. And they did. They got really, really good at it. And it became a cornerstone of their business. And it was around 2019, 2020, when I came on board to explore the opportunity of potentially taking out the IP that they had built and then trying to commercialize it. And what today now is Edge, which is very different than what we started with 4 or 5 years ago, but it was definitely the foundation.
No, that is a great founding story. Now, what is the number one use case that you solve for at Edge?
So we started out with decisioning. So if you think about customer journey when you're assessing consumer risk as a lender, our business is built by lenders for lenders. So I should probably back up and let folks understand that we're an analytics business and we have a very, very heavy emphasis in the fintech. That those 3 letters are important to us. So we started in the middle, which is decisioning. And from there, we got better and better at being able to extract the right attributes that we know would be predictive and would work in assessing consumer risk. And then from there, we were able to create scores that we knew over time through optimization we perfected. From there, once you start to get to the point where you've solved, if you will, the decisioning component of risk assessment, you can start to offer ancillary products. So we have other products that are pre-underwriting. We call them screening. You can screen a consumer. If the question you're asking is, are you who you say you are? Let's get to know you, versus underwriting, decisioning, which is, I know you, but now I want to get to know you a lot better. And we have products now higher up in the funnel in screening, and we have products lower in the funnel in collections and recovery. And that question you're asking in that product lane is, I know you pretty well now. I've lent you money. I want to get to know you even better to see if I can offer you more things or to see if I can help you in a time of need, depending on your use case.
So decisioning is the common thread.
Yes.
So helping lenders make better decisions throughout the funnel. So in targeting, in underwriting, and then also in collections to better understand that customer so that they can make better decisions.
And we're 100% reliant on bank transaction data to do that. So, which is critical. If you think about up until the last few years, most consumer risk was done through trade line data and the big 3 bureaus. And today, Edge is also a bureau. We're a consumer reporting agency. So we can offer scores and attributes that you can decision off of that are FICRA compliant, but also it's solving for the same thing using a different data set, which is really helpful when you're assessing risk.
Bureau data only got you so far. Adding that cash flow data and understanding actual transactions where things are being spent, I think is very, very powerful and adds that additional insight that you're just missing by, I always say, looking in the rearview mirror with bureau data, right? It is only historical and it is only so up to date. Whereas with transaction level data, you can be much more precise and much more up to the date that you're actually making the decision.
To the minute, that's right. And also, it's, if you think about different risk cohorts in any population, but let's talk about the US population, the non-prime group tends to be the most affected by not having data available on them at the bureaus. We call those thin file, no file consumers. And or they may have had a blip in their credit history. So you don't really know that much about the consumer by pulling a credit report most likely you want more information. Alternative data like bank transaction data offers meaningful insight into that consumer.
Now tell me, what is your favorite customer story?
So we have a customer that we started working with about a year ago that is high velocity fintech lender and relatively sophisticated. But they were, for some of their portfolios, they were using manual review on their riskiest customers. And by switching to us for most of that underwriting process, they had roughly a 50% improvement in error rate handling, meaning that gives that chief risk officer multiple options on what to do with all that extra excess. To the good, they can lend more or they can tighten up their curves. In this case, they did a little bit of both, but having that type of optionality as a lender is meaningful.
50%. That is a significant number, and I'm pretty sure that they were quite happy with that.
They were. You would think machines would do better than a human, at least at scale, because it's not easy to do it at scale and hold on to a certain level of accuracy. And we've been able to do that.
Now, earlier you mentioned that you actually had another customer story. So
Yes.
tell me, I'm dying to know, what is the number two customer story?
So we are an analytics business, as I said earlier. We're a CRA, and our flagship products are built around analytics, but we also offer aggregation. We're essentially an aggregator of aggregators, and we work with a number of different aggregators. And in this specific example, when this company switched from their old aggregator to our aggregator hub, they had a 500 basis point increase in conversion, apples to apples, which doesn't sound like a ton, but when you think about the volume that they're pushing through, it's meaningful. And they're going to be upgrading to our new aggregation hub next month, and they're going to probably get another 5% increase in conversion. So now you're talking about 1,000 basis points increase in conversion. The math is meaningful.
That is significant on big numbers. That is a really good improvement. So I can see that they are also very happy with the switch that they made to you.
They are. They're one of our best customers.
Well, that is probably a great point to wrap this up on. Thank you very much, Brian, for being on the podcast.
I appreciate you having me, Rutger.
And until the next LendAPI Partner Podcast.